We're jumping straight into POET technologies today. Everyone is watching the price action, but the real story is the transition from a science project to a mass production powerhouse for AI data centers.
Exactly. You're tuned in to the Easy Money Show, where we make sense of the market's biggest moves. I'm glad you're with us.
And hey, before we really get into it, do us a quick favor. Hit that subscribe button and smash the like. It really does help us simplify the market for more people just like you.
It really does.
Okay, so let's unpack this. We've been tracking the chatter on POET for a while now, and honestly, the research piling up is fascinating.
Yeah.
It feels less like we're looking at a normal stock
Yeah.
and more like we're staring at a bottleneck in like the actual physics of the internet. We've got stuff on their Optical Interposer, reports on their partnership,
Malaysia deals, yeah.
and some pretty intense debates about their financials. But before we get to the money, I really need to understand the machine here. The entire bull case seems to rest on this one piece of tech, the optical interposer. I keep seeing it called the semiconductorization of photonics. That sounds great, on a slide deck, but can we just strip away the jargon? What are they actually building?
Well, to get the what, you really have to understand the problem. The huge problem the industry is facing right now.
The AI arms race.
The AI arms race, exactly. Data centers are buying GPUs from companies like NVIDIA as fast as they can possibly make them. These chips are. It's just incredibly fast.
Right.
But here's the catch. We're still connecting these supercomputers, for the most part, with copper wires or these very expensive, clunky, old optical cables.
And that's the bottleneck.
That's the bottleneck, pushing massive amounts of data. I mean, we're talking 1.6 terabits per second through copper generates a ton of heat. Resistance is just a killer. It's like trying to push a river through a drinking straw.
Okay, right. And we know the industry is moving to light. To fiber optics, we've had fiber for decades now. So what makes POET so special? Why is everyone acting like they've invented something totally new?
Because the issue isn't the fiber itself, it's the packaging. It's how you connect the light source to the chip.
Okay.
Historically, connecting a laser, which creates the light, to a silicon chip, which does the processing, it's a nightmare. It's a manual, expensive, messy process. You literally have technicians or very expensive machines trying to align a microscopic laser with a microscopic lens.
Wow.
And if you're off by a fraction of a human hair, sub-micron precision, the signal just dies. It's called active alignment. You have to turn the laser on, measure the light, nudge it a tiny bit, measure again, and then glue it all down.
So it's slow.
It's slow, it doesn't scale, and it's incredibly costly.
It sounds like trying to thread a needle while riding a roller coaster. If you have to do that for millions of chips, you got a problem.
That is a surprisingly good analogy. Now, here's the moat you were asking about. POET's optical interposer changes the game because it allows for passive alignment.
Passive alignment.
Imagine a flat silicon wafer, just a standard chip. POET has etched these very specific physical grooves and guides right into that silicon. So instead of, actively trying to aim the laser, they just drop the components into these pre-made slots.
So the wafer itself does the alignment.
The physics of the wafer forces the alignment to be perfect. They've turned a manual construction project into a pick-and-place assembly line.
Okay, I'm with you. I see the distinction. So instead of building each transceiver by hand like a bespoke Swiss watch, they're trying to print them like newspapers.
Essentially, yeah, that's the idea. It's wafer-level chip-scale integration. They can marry the electronics, the silicon brains with the photonics, the light on a single platform, no manual alignment, no messy glue.
And there's a specific number here that jumped out at me from the reports, 40% energy savings. In the world of AI data centers, that seems huge. Is that just marketing, or is there real engineering behind that?
Oh, it's real, and it all comes down to proximity and efficiency. Because POET can integrate these things so tightly on the interposer, they get rid of a huge amount of the signal loss you see in traditional transceivers. Less
loss means less power needed.
Exactly. Less signal loss means you don't have to pump as much power into the laser to get the message across. And you have to realize, for a 1.6T transceiver, the next-gen speed for AI cutting power by 40% is just monumental.
Yeah.
Data centers are literally being built based on where they can get power. They are running out of electricity. So if you can slash the power bill for the data transport part, you leave more electricity for the actual compute, the AI's thinking. So the pitch is, we make it cheaper to build because it's not manual, and we make it cheaper to run because it burns less electricity. That's the physics advantage. That is the technological bull case in a nutshell. It's an efficiency play on the biggest infrastructure build-out in modern history.
Okay, the tech is cool. I get that. And you knew there was a but coming.
There's always a but.
Great tech dies in the lab all the time. I've seen tons of revolutionary patents that never made a dime. To make money, you have to build millions of these things, not just a prototype.
Right.
And that brings us to their fab-lite strategy. I want to push back on this a bit. Usually when a company says fab-lite, I hear, we don't have the money to build a factory. Is that what's happening here?
It's a fair skepticism, for sure. Building a semiconductor fab costs billions of dollars. POET is, a relatively small company. They just can't build a tier 1 fab.
So it's a necessity.
It's their only option, but it's also a smart strategic choice. They're acting more like a design house. Think of how Apple designs the iPhone in California, but they don't own the factories that actually build them.
And speaking of who's building them, the name that keeps popping up is Foxconn.
Yeah, that's the big one.
I mean, they're working with Globetronics and NationGate in Malaysia, which are solid players, but Foxconn.
Yeah.
That's the signal the market is watching.
Foxconn doesn't waste time on, hobby projects. If they're involved, they must be expecting serious volume.
That's what I was thinking.
Foxconn operates in a world of millions of units, not thousands. The fact that POET has secured a relationship there, it suggests Foxconn sees a future where these interposers are just everywhere.
And to get that ball rolling, they raised some money. I saw a mention of a $40 million capital raise in Q1 of 2025.
Yeah, and that was absolutely necessary. Dilution is never fun for existing shareholders, but in this case,
They had to do it.
they had to. That $40 million basically shored up the balance sheet. It gave them the runway to pay for the tooling, the materials, all the setup costs to get those production lines moving at Foxconn and in Malaysia. It changes the conversation from, will they go bankrupt, to how fast can they scale?
Okay, so they have the cash to start the engine. Let's talk about the destination. The reports mention a revenue inflection point. We love that term, but it gets thrown around a lot. What kind of numbers are we actually talking about?
The guidance is, it's aggressive. They're targeting an annual capacity revenue of $50 to $100 million by late 2025.
Okay, hold on. In a world where we talk about NVIDIA making billions a quarter, $50 to $100 million sounds kind of modest. Why should an investor get excited about that?
Because you have to look at the rate of change. We'll get to their current revenue in a minute, but spoiler, it's tiny. Going from where they are to $100 million is a massive, massive jump. And it's driven by a projected market need for almost 32 million units of high-speed transceivers in 2025 alone.
32 million units.
Yeah. That's the total market for 400G, 800G, and that new 1.6T speed.
That is a lot of sockets to fill.
Exactly. So even if POET only captures a tiny sliver of that market, their revenue just goes parabolic compared to their history.
And that's why we're seeing some of this analyst sentiment, the news pointing to a $15 price target. It's all part of this AI optics hype.
It is. The market is looking for the next NVIDIA of the optical world, the company that provides the picks and shovels for all this light-based data transfer.
And before we leave the bull case, I got to ask about the rumor mill. There was a little mention of a speculative rumor about a potential buyout by Marvell. Obviously, we don't trade on rumors, but strategically, does that even make sense?
If you connect the dots, it makes perfect sense strategically. Marvell is a giant in data infrastructure processors, DSP chips, all of that. But the optics piece is tricky.
Right.
If POET's optical interposer really is the best, most efficient way to integrate light and silicon, Marvell might decide it's cheaper and faster to just buy the tech than to try and compete with it.
A classic buy versus build calculation.
Exactly. Why spend 5 years and millions in R&D trying to engineer around their patents when you can just write a check?
Yeah.
Even if a buyout never happens, the fact that the rumor is out there tells you the industry sees the tech as either a threat or a really valuable asset.
Okay, so that's the sunshine and rainbows view. We have revolutionary tech, big energy savings, huge partners like Foxconn, and a massive market just waiting.
Sounds pretty good.
But, and there is always a but on this show, we have to look at the other side of the coin. Let's flip to the bear case. Because if you look at their actual bank account right now, the story looks a little different.
It looks very different. This is what I'd call the revenue reality check. If you pull up their Q3 2025 filing, the actual revenue reported was only $298,434.
Oof. Less than 300 grand. That is small. We're talking about a company with this massive valuation and hype, bringing in the revenue of a small coffee shop for an entire quarter.
It's a very stark contrast, and you have to look at where that money even came from. It wasn't from selling millions of optical engines.
Right.
It was primarily from what's called non-recurring engineering services, NRE.
So basically, consulting fees. Hey, Pay us to design a prototype for you, that kind of thing.
Correct. It's clients paying them to customize designs or run tests. It is not commercial sales. It's not recurring revenue. So right now, Pewit is effectively a pre-revenue company when you talk about commercial scale.
And the market is pricing in a future that hasn't happened.
Exactly. You are paying for the expectation of that $50 to $100 million, not the reality of the $300.
And that leads right into execution risk.
Mm-hmm.
Because saying you're going to ramp with Foxconn and actually getting the production lines running smoothly, two very different things.
This is the #1 execution hurdle. Everything, and I mean everything, hinges on that Malaysia clean room ramp up and Foxconn hitting their production targets in the second half of 2025. Manufacturing photonics is just notoriously difficult.
So any delays there?
If there's a yield issue, say the lasers aren't bonding correctly or some supply chain snag, that inflection point gets pushed out maybe to 2026, maybe 2027.
And for a stock priced for perfection, a delay isn't just an annoyance, it's a potential crash.
Precisely. And it was noted that despite all the bullish headlines, the actual sentiment scores for the stock have been kind of neutral. It's been stuck in this consolidation phase, like the market is collectively holding its breath and saying, show me the money.
And we can't forget the competition. It's not like they're the only ones trying to solve this problem.
No, not at all. You've got giants like Intel and really sharp innovators like IR Labs.
Right. Intel isn't exactly a startup in silicon photonics.
Intel has been working on this for over a decade. And while Pewit seems to have a cost advantage and this unique interposer approach, displacing an entrenched competitor like Intel is incredibly difficult. They have deep pockets and existing relationships with every single major data center operator. The old saying, nobody gets fired for buying Intel. That's it. And then you have IR Labs doing fascinating work with optical I/O, moving light directly onto the processor. Pewit's argument is that they're agnostic. They can work with any laser, any chip. But they have to prove that their mousetrap isn't just better, but scalable and reliable enough to win those design slots.
So it's a classic setup. High tech, high potential, but also high risk and fierce competition.
That's the trade-off.
For the listener trying to figure out what to do with all this, we need to look forward. We're in spring 2026. What exactly should they be watching in the next 30 to 90 days? And don't just say, watch the stock price. What are the real triggers?
Okay, 3 main buckets to watch. First, and most obvious, is earnings. We have the Q4 2025 or Q1 2026 reporting cycle coming up.
But don't just look at the top-line revenue number, right? Because we know it might still be low.
Exactly. Do not just look at the total number. You have to dig into the breakdown. You're looking for that shift from NRE, the engineering fees, to actual product revenue.
You want to see invoices.
You want to see invoices for optical engines, not just design studies. And critically, listen to the guidance. Are they reaffirming that $50 to $100 million capacity target? If they start to waver on that or use words like supply constraints or push timelines, then look out below.
Okay, so watch the revenue mix. What's bucket number 2? The product side.
Yeah, we need to see physical proof of progress. In the first half of this year, 2026, we should get news on the Sivers Semiconductors prototypes. If those prototypes perform well, it's a huge validation that the platform works with third-party components.
And what about Foxconn?
Keep your eyes peeled for any press release that comes specifically from Foxconn.
If Foxconn puts out a release saying production lines are live, that's the green light.
That would be the smoking gun for execution. If Foxconn says, we are shipping, the entire risk profile of this company changes overnight. And then finally, just watch for mentions of their new tech, the Terralite 1.6T or the Blazar product lines, especially around industry events like OFC.
Right, the big optical fiber communication conference.
Yeah, the trade shows. If the industry buzz at those events is all about Pewit's new specs, that's a great leading indicator for future orders. If their booth is quiet, well, that tells you something too.
And then zooming out, there's the macro trend. The whole photonics market is supposedly a $5.6 billion market, growing at over 22% a year.
That's the tailwind they're sailing with. If the hyperscalers, your Googles, Amazons, Microsofts, keep throwing their capex at high-speed optics for AI, Pewit is perfectly positioned to catch that wave. But if that spending slows, or they stick with older tech for another cycle, that wave could pass them by.
So it's a bit of a waiting game, but with some very specific signposts to watch for. Okay, let's wrap this up with the lowdown. Pewit Technologies is a high-risk, high-reward play on the pure physics of AI data centers. There's no doubt they have the technology, that optical interposer, to save energy and lower costs. That 40% energy saving, That's the golden ticket.
The technology works. The science project phase, that's over.
But, and this is the big one, they have to prove they can manufacture it at scale this year. The difference between a science experiment and a blue-chip company is execution.
That is the bottom line. They have the partners, they have the cash, and they have the demand. Now they just have to build the things.
Exactly. It is show me time.
Mm-hmm.
Thank you for tuning in to the Easy Money Show. We hope this helped you see through some of the hype and the headlines. Keep an eye on those Foxconn announcements, and we will see you on the next one.
Thanks for listening.